Hey, Mark, how's it going?
Good. How are you?
Good.
Good.
The hockey playoffs are in full swing and the Leafs are
Yeah, they're done. Sorry to say,
sucking
but they're
high and tit again.
not beating Boston. It's not going to happen.
Yeah.
Not so. So today's video, we're going to go through the new capital gain that takes effect in June 25th. There's lots of information floating around. I think everyone's trying to get a handle on or have some understanding of it. Um, for
Well,
people that
most people, and that we've been talking to, and even us are getting like different versions and what's what. So that's why we wanted to kind of do the video to inform people on exactly how it's calculated and who it impacts.
yeah, well, I think the Liberal government has spun this in a way to everybody that it's only for the rich of the rich, but that's not true because everyday people own investment properties. And I'm going to pull a stat up here and pull it up
It might
from,
even be in our article too that I have.
yeah, well, I know. Let me just shoot. I had it. Here it is. This is from Royal LePage last year, where they say, once again, the government's estimate about the number of impacted individuals is misleading. Approximately 4.4 million Canadians own an investment property, with one-third of them owning two or more properties, according to Royal LePage survey done in May 2023. Moreover, 11% of Canadians own a cottage, with an equal number looking to buy, according to a Remax poll in 2023. So this does impact the everyday middle class individual.
It
It,
does.
in my mind, we support the whole system, we fund it, we pay for it, and we slowly inch lower and lower because the cost of living is out of control in this country.
And they tax the hell out of us.
So
Um, if you like our stuff, hit the like or subscribe or drop a comment if there's something you want us to cover for you. I'm going to share the screen because Mark just touched on a big thing that this article talks about. So it says that increased taxes on investments. Apparently, Mark, this is being done. So listen to this. After unveiling plans to spend billions of dollars to boost Canada's housing supply and social programs, the federal government is framing its plan as a fair way to offset these investments and prevent younger generations from inheriting a deficit.
right.
Like that really is going to happen. They're just saying that, right? I
Pretty much.
understand for some people this may cost more if they sell a cottage or a secondary residence, but young people can't buy their primary residences yet, Prime Minister Justin Trudeau told reporters. Here's what so he's framing it that in order to get people into the housing market, let's tax the other people more.
Now let's tax some more so they exit their positions, and then we create some more supply. But you know what? That's not going to happen. And here's the changes. So the share of the capital gain right now is 50%. And what that means is 50% of the gain. I'm going to make it real simple. You have a gain of 200,000, $100,000 is taxed. Now that $100,000 is taxed at 67% of
Okay,
the
but you're
gain.
missing something here. So the share capital gains is going from 50% to 67%. The
Right.
change will apply to those with more than $250,000 in capital gains in a year as of June 25th.
Correct.
So the government is saying it will affect the wealthiest 0.13%, about 12% of Canada's corporations, and as well as Canadians with an average income of 1.42 million.
That's
That's
false.
craziness. That's craziness, right? But on the first, for an individual, on the first 250,000, it's still 50%. Anything over the 250,000 is now at 67%.
Correct.
Now, capital gains,
Go through the example. There's an example below.
I am. But I want to also explain a capital gain is the difference between the sale price, the total price of the property's purchase price, including acquisition costs, any expenses incurred from the sale.
Correct.
So you have your price of your property, all the expenses, that gets deducted from the sale. price, and then whatever's left over is your capital gains.
Correct.
33% of it right off the top is not taxed. Is that correct?
Yes, it's correct.
Okay, so here's your example. If you sold an asset for 500,000 with a purchase price of 100,000, your capital gain is 400. The taxable gain amount is 200,000, which is
At the old-
50%. Okay?
The old way.
Once the rate of 67% takes effect, the capital gains tax will be higher for amounts over 250. But amounts 250 and below will be taxed at the old 50% rate.
Correct.
Now, what that means is if you make $200,000, 100,000 will be taxed,
Correct.
right? Regardless, because it's under the 250 mark.
Yes.
And it'll be taxed at 26% from what you were reading.
What I was reading is the marginal tax rate. And again, it gave the highest, it's not your marginal tax that we've taxed the base of your income. I don't fully understand it in a sense. It didn't really give me some how they calculated the number. They only went right down to the bottom. It says highest tax bracket person today would be 26.8% would be the gain would be taxed at that. Now, June 25th, it's going up to 35.7%, a 33% increase in the tax rate. So
Right.
they're not taxing the gain at your marginal tax rate. They're capping it in a way at the highest level, which is 26.8%, 35.7 after June 25th.
And homeowners who their principal residents are not affected
That's
at
correct.
all. So a principal residence applies to a house, a cottage, a condominium, apartment in an apartment building or duplex, a trailer, a mobile home, or houseboat that it individually usually inhabits. Okay? So any of those things there would be no capital gains on it.
It's principal residence, there wouldn't be.
Right. So yeah, you can only designate one home as your principal residence.
Yeah, you can't have, even though you have 5 properties, you own one is your principal res, the other 4 are investment properties. Those assets are assets that are going to make money at the end of the day.
That's right.
And they're taking more up.
Right. So on the 250, they take 50% of that and then they tax it at 26.8.
Correct.
After the 250, it's going to be 67% of that amount of money. So if it's 100,000, they're going to take 67,000 and tax it at 26.8.
That's
That's what they're saying here.
Well, at the old way, but if the gain's over 250, then it's going to be that
but the first 250 is still 50%.
Correct.
Anything over, yeah. So if I make 350 and I got 100,000 over the 250, I'm at 66% or 67%, which would be $67,000.
Right. Taxed at, say you're the highest income earner on your personal income tax, going to be taxed at 35.7% of the gain. So let's just do the math for shits and giggles here to make it really easy. So we'll just make it nice. 100 grand.
67,000 would be the amount taxable.
Yes.
At 26.8.
Well, that's
what this guy's saying.
At what though? If that gain's going to go up though.
Right.
That rate's going to go to 35.7 effective June.
Right. So they'll do it at 35%. And I just want to do a little misnomer here.
$23,919. So
how much?
$23,919 on that gain with the new tax rate of 35.67%. Right. So
that can't be right.
Well, we're taxing at the 67,000. So that's the gain.
67,000 at 35%.
$23,919.
Wow. That's a lot.
It's a lot of money.
Well, that's on exactly 100, but that's on $100,000.
We just said the 350, the 100 grand is, so we took the 250, we added 350, we took the 100 grand at that price. Yes.
That's right. So on the 100 grand, it ended up being 23,000 and change.
Correct.
Right. So a lot of people are saying, oh my God, it's 66%. They think they're paying 66%.
I know.
They're not.
They're not. They're not. But here's what I think that's going to happen is that to me, this is going to discourage investment in real estate. It is. At the end of the day.
Well, listen, I agree. I think it's going to discourage. It definitely is, but I don't think it's going to make a whole bunch of people sell right now.
Not right now. You can't get them in. You can, but they're gonna, you know what I mean? Hey, talk to your accountant when it comes to that kind of advice. But yeah, some people might just say, I'm done with the government. I'm pissed. I'm selling these assets. It's just better to keep the money under the pillow because all I do is pay.
And just, yeah, Mark, now that you said that, just so people know, we're not accountants and we're not trying to give you tax advice. We're just trying to kind of work out with you, along with you, how this thing works. For definite numbers and money, I would definitely talk to my accountant, right?
100%. Here's what I'm going to go back to why I don't think this impacts more people than what they're saying. Me and you don't have pension plans. There's a lot of people out there that don't work for the feds, that don't work for the government, don't have provincial jobs, whatever, and don't have a pension. So we do invest. And this is just not real estate. This is assets across the board, stocks, bonds, whatever, currencies. Everything is being taxed on this more and more. This is the concern. And we're paying with net dollars. So here's a really easy example, what we talked about earlier today about a corporation. And it talked up on this video that I watched this afternoon. I watched 2 or 3 about why the medical community is just pissed.
It's right here.
Yeah, I know the article, but I'm just going to talk about what I saw about how they're. So all these doctors, right? They have corporations set up. Their money's coming in, money's going out, fees, payments from the government, and then all that actually, and what they take out for that, they're paying personal income tax. So what they're really pissed about is that, again, they're building their future with the large sums of money because they get compensated well. So lots of sitting in that corporation. So they're buying stocks, they're buying real estate, they're doing it. And now they feel, holy cow, I'm getting taxed even more now. So there's been a few videos on there telling you that these medical people are pretty pissed.
Yeah, it says right here, the Canadian Medical Association is also opposed to the change in capital gains tax. The group worries the effect of increasing taxes on many doctors' retirement investments will add financial strain for doctors who do not have a pension to rely on. She said many doctors incorporate their medical practices and invest for retirement inside their corporations. Well, there's 2 things I want to say about that. The doctors are never going to be in financial strain, Mark, for one.
Never know.
And they're not. And they're putting their money into these corporation names and then investing in real estate and stocks and stuff to make so their money makes money, and they're not taking it out because they don't need it to live on. So they're leaving it there and they're investing it. And unfortunately, I think everybody these days, like if you make money on Tesla, you got to pay the flipping tax on it.
You're paying
It's no difference, right? From being a doctor or anybody else that's investing.
This can apply to us. We're real estate agents. We have no pension plan. We're buying properties, and then we want to retire in 15 years from now. We sell these properties. We're getting taxed higher. No
right,
different.
We're getting taxed higher. No question. And the other thing is, for corporations, the rule is there's no $250,000 cap that it's only 50%. It starts from $1 it's 66%.
Yeah. Yeah. So there goes to what I'm getting the point across is that why invest? I'm serious. I don't think you're going to see with the bullshit in the landlord tenant board today. Now with capital gains, what incentive is it to take on to do all this?
Well, look at this, Mark.
It's not.
Trudeau and his deputy, Chrystia Freeland, defended the move, saying the current tax system means a nurse, student, or carpenter could be paying income tax at a higher marginal rate than a multimillionaire who can use accountants to pay a lower tax rate. That is true.
Sure.
That is true. The people with more money have definite ways to get around paying. They do. The Liberals say the change will not affect 99.8% of Canadians and does not apply to the sale of primary residence, but it is expected to rake in 19.3 billion over the next 5 years.
A lot of money. He keeps on putting into the primary residence so people feel good about this. There's nothing to feel good about this increase in taxation. There's not.
Well, the thing is, to me, is you even said that 11% of the population, or 13, what was it that Royal LePage said?
They say 13% are planning to buy a cottage. That was rematched.
And how many already own one? 11%? So they're trying to say here that 99.8% of Canadians, none of this applies.
It's wrong because it applies to a lot more that or we don't have pension plans. We're lucky that we're self-employed in a way because we get the write-offs, et cetera, but we also have to build for retirement years and we have to invest wisely because we're not going to sell real estate for the next 30 years. At least I'm not. So, so you have to, so when you do that, to me, it just, what's the incentive? It comes down to what is the incentive today to go build up a portfolio of real estate assets. Long-term, yes, you got to give your share of the tax base, but when's enough is enough.
Well, not only that, I actually, I have a little beef about the incorporation thing and the doctor thing, because I think people like us that don't get incorporated, we don't have the benefits at all of what they have.
We can though. We'll get corporate if we
They're
want.
paying their daughters, they're paying their freaking wives. You know, like I used to do taxes. I actually took a course and well, I haven't updated it, so I'm not an income tax professional, but I was. And like, there are so many ways to get rid of money in a corporation. It's not funny. I can't do that as an individual, and neither can you.
No, but you know, we have the opportunity to do that. We have an opportunity to incorporate. I don't see the big advantage of it. Unless you have, I don't need the money for 5 years. I'm sitting comfortable, real comfortable, then yeah. But if you're going to be drawing off it.
Listen, that's exactly my point. The only people that have incorporated are people that have so much money that it makes sense.
It makes sense if they're not going to draw, for sure.
Well, they don't need the money. So it's basically people that have a lot of money that don't need the money they're making, so they can shelter it there.
Here's a benefit now. Let me talk to a benefit to that. So people with a corporation, whether it's me, whether it's you, whether it's the doctors or whoever, so they take a small draw, et cetera, they're leaving lots of money in the corporation that hasn't been really taxed. It's been taxed at their lower rate of 12%. Okay, big deal. It's not much. Are using those funds to grow their assets, which is kind of nice. That's a check mark for that group of people that can do that. And again, they're going to the doctors to show this because of high income earners and stuff like that. But you and I both know there's some real estate agents that are making $800,000-$900,000 in Barrie that could be sitting huge in a corporation. You compound that money over time and keep in buying property or stocks and stuff using the corporation's money. But again, $1 will be taxed. Right?
Well, yeah, 66% of it will.
That's right.
But my devil's advocate to that is, if they're making so much money, why should they be taxed? We would be taxed if we were making that as without a company.
Oh yeah, that's the plus. That's the bonus about having that corporation. There's some upside to it, for sure.
Like either way, if they're going to make money on investments, they're going to have to pay.
Yeah, they're paying just like me and you are going to pay, right? But using the money. But for the everyday investor, I think they're going to be.
I think it's going to hurt the smaller people. I think the people with a lot of money, like doctors and stuff, in the end, they're going to have the money to pay the tax, and you're only paying tax on money if you actually have a gain.
Well, yeah, well, for sure. I mean, they use them and stuff like that. You know, maybe not the best example, but whatever. It's getting some views right now. But I'm more concerned about the everyday person out there that is going to be impacted by this. And I don't think the feds are spinning it that way. They're saying the wealthy of the 0.1% or whatever. That's bullshit, because there's a lot more people affected by this than what is. You have a secondary property, you go sell investment property next year, you're taxed higher. Their gain is there.
Oh, and you know, I have a lot of clients. I know a lot of people. You know a lot of people. I know a lot of people, you know a lot of people.
100%, 100%.
Lots.
This is going to do nothing. I think this is going to do nothing long-term for creating housing, more opportunities. So some are going to be pissed no matter what. Say, I'm done. They're going to sell. That's it. I'm done with this. I'm done. That's going to happen. But what about the new people? Are they going to be investors? Are they going to create so what they sell them? Maybe we know another investor is not going to buy it. We're already seeing that right now with the properties that are vacant now in the community, which there is a big number that we went back and looked, and there was a lot of, oh, that was a rental, that was a rental, that was a rental. They're getting out. Other
Well,
investors
yeah.
buying
And
these
and
properties.
and you know, they're getting out before the capital gains even changed.
Yeah, they're
So
trying
they're
to.
not getting out because of that.
No,
Because
no,
now,
no.
like I said, the rule changed too late, really, for
Yeah,
them. It's June. How are you gonna, especially if you have tenants in the property, Mark?
yeah, no, it's gonna take some time.
You're not gonna get out by then.
No, no, not at all. But I don't know.
I
I'm just not
think
a big fan
No,
of
I
this.
think you're right. I think you with the LTB issues and now this, you're definitely discouraging investors and people that want to get into multi-unit housing or multi-family residences.
100%. They're not going to. I think that is when we start seeing more supply come in the market, and they're trying to think this is going to create more supply. I don't think it's going to create more supply. I really don't. I don't think it's going to do nothing. I think it's going to really hurt the supply in a sense from the renters, because we're seeing that supply getting smaller and smaller as we progress month by month. We're seeing in the real estate board. We
Well,
see.
and you know what, Mark? If I owned a bunch of properties and I was still making a lot of money at my job, I definitely wouldn't sell now then.
No, you wouldn't sell if you don't need to sell. No, but there is going to be some people that say, "I've had enough of this. It's this principle. I'm done."
But do you think people would
Well,
sell less investment properties? Because why would I sell now if I still make a big income? I'm also wait till I'm retired.
sure, it's not going to be a lot of them. I don't think this is going to create a people get putting them on the market. I just think there's going to be a small group of that audience that's going to go, I've had enough of this fucking country, and just go, I'm done. I'm
Yeah.
paying. We see the paychecks. We see what's being taken off people. We see the high costs of, to run a household today. It's crazy. It's a lot of money.
No,
People are
it is.
financially strapped, and who knows? Maybe some of these people are selling because they are financially strapped. Maybe we need some
Yeah.
cash to be back injected into the monthlies because we're buried with this variable rate mortgage on the principal residence. Who knows? There could be many different reasons. We never know which one it's going to be, but we're seeing some supply in the rental properties being put in the market today. And I think this is a deterrent for people to go and build up their portfolios. I think why, right?
Well, and what the government doesn't really realize, I don't think, even you see all the new things they're doing, we need the investor to because they're the ones with the little duplexes and triplexes that are tenanting them out. We need those people.
Yep. And how many, and you look at it, how many are being sold vacant? We don't know who's moving into them. We don't track that. Maybe there's a video for us to go back and look at duplexes and sold and then cross-reference it and see if it was listed back on the market for rent. It'd be interesting to do that. And I
Yeah,
think
yeah.
this week, just to see see if investors are buying them. But I don't think they are.
Not a large amount, no.
No, I think that's, maybe someone says going to move in it and get settled and maybe rent out the basement at a later date when some issues get, cleaned up with the landlord tenant board, possibly, or just say,
Mhm.
you know what, we're going to use the whole house. I don't know, but I think that's a video for us to do next week or this week. And I'll do some research on it to see if we can cross-reference them, go back a couple months and see if we can see them back on the board as rentals. I don't think we're gonna, but I don't know. I just think it's going to do nothing for the housing supply.
It is.
I don't think we got anything covered up. I just think it's going to clear up some stuff. And again, there's so many information floating out there. This is our opinion. This is not anyone else's opinion. Take it for what it is.
And
But
don't trust our math.
yeah, whatever. Yeah, that's why the friendly calculators there. But whatever. Yeah, I think we got the idea across that. You know what? I don't think there's no panic buttons hitting off, but I think there's going to be some more frustration, right?
Yes.
I see that. And one more thing too, when I've seen some other things about, they gave an example of someone that say makes 100 grand. It could be a factory worker. Some works at Honda. and they do $30,000. So now they're up to 130, and that $30,000 is all overtime dollars. Time you pay the taxation on it, that person keeps 8,000. 22,000 goes to income tax. So it's almost like, why work more?
Oh, it doesn't make sense?
Doesn't make sense. This is the concern. Will that concern come over here? Why invest more? They're getting more. Forget it. Get it. I don't know. Maybe there's different ways. What I would do if I was young, okay, I'm going to go into a house. I'm going to buy a house. Great. And I don't care what it looks like inside. I'm going to decorate it. I'm going to do some great upgrades, spread over 2 years. Thanks very much. See you later. For sale sign. Great. I made 200,000 tax-free dollars. Great. Let's go do it again, honey, and do it over and
Well,
over. No,
exactly, exactly.
you have to
And
invest in property, do that.
well, and I'm thinking of doing the same thing on mine now. Like I don't have to live in any certain area. I don't have to do anything. And I'm thinking, why wouldn't I sell this? Make
Okay.
money and go on and do it again.
Tax-free.
It's tax free. That's the way to do it.
So do it. It is. That might become the new investment vehicle for people go, you know what? Don't get attached to the house. Just do the right upgrades. Do what's going to increase its value. Spread it out over 2 years because you don't want to sell in a year, but or maybe even 3 years. I've
Yeah.
done it times. I made great money doing it. And
Yeah.
it's all tax-free dollars. So today, now it's going to be all about tax-free dollars. So will it be interesting? The investors go, hey, again, local ones maybe, or will they just buy in their communities now? Go, we're moving every few years. There's lots of people I know that do that. Not a bad way to make a living.
Well, especially a young one. Because once you have kids and they're in a school zone, you know yourself. Now it becomes difficult because they're in school, they have friends.
I know it's not easy, right? It's not an easy thing to map out, but
When you're young and you don't have kids, I mean, go for it then.
do it. Again, anyone likes the video, give it a like button, share, and drop a comment. Okay, we're done.
Perfect.
See ya.
Bye.